All right, boys and girls. So we are live on YouTube. How is everyone doing? It's been some time since we done that. So we're having an interesting day on gold today. Hey, we have a double distribution day. Let's just go through the whole process from the beginning and see what we are looking at. So we are still within this day's value. And as you can see, market trying to reach this high volume node. If you guys been here with me for some time, you know how I like to trade and stuff. So yes, we're about to reach the high volume node. Therefore, I'm looking for a reaction around that level. And also we have some gamma levels up there. Okay. And when I'm talking about gamma levels, I'm talking about 1-day max and some blind spot level to be exact. Also, if we look at the previous day's volume profile, we can see the extreme is sitting up here. Okay, extreme is sitting up here, this yellow line, so I'm expecting a reaction up there. And also you can see from the composite profile there is this value extreme. Now that's the whole trade plan side. Now let's go over to the gamma level side. Okay, if I can just grab my thing, there you go. So this is the futures price we're looking at. We had if you look at the net gamma exposure here, and I'm talking about intraday. Okay, currently I'm receiving delayed data. I still didn't get real-time data for some reason. They're still fixing that. Anyways, 41.25, we have 830k. That's net gamma. That was for 41.25. Now, what can I go up to? 41.50 is a major level, and also 41.46 over here. You can see minus 151k. However, this has more attraction, 41.50. Okay, now what is the absolute gamma exposure? You can see 8 million sitting at 41.50, and only 3.8 million was sitting at 41.25. What about net gamma exposure? Minus 151.8 million sitting at 41.50. So 41.50 is a key level, guys. Then absolute delta exposure, 41.50 again. So multiple factors confirming that 41.50 is a key level. Now let's look at open interest, and you can see the open interest here. Okay, you can see calls and puts. Okay, if I can get it right. Oh, come on. Calls 4k, puts 3k. Okay, now 41.50. Let's go back over here, and as you can see, we are having a reaction up there. Where is 41.50? Right, 41.50 is around here. Okay, 41.40. There's 10 points difference. 10 handles difference between spot and futures. So 41.40. And also, if you look at the previous volume profile, we have a missing POC sitting there. Okay, missing POC sitting there. So we're expecting a reaction from there. Now, looking at the footprint, we can see massive negative delta coming in. And also, hold up guys, let me just quickly add to my trade. I was already on a sell, I just added a little bit more. I'm trying to build my position up here. You guys know how I like to build my position. I don't like to build it anywhere. Like, I will have a test trade, and then once it gets to a certain place where I think I should be looking to add, or I expect a good reaction, this is where I add. Anyways, we can see massive delta divergence. Market made a higher high, delta made a lower high. Therefore, we are leading heavily on the downside. Did we get to 41.50 yet? No. 41.50 is sitting all the way up there, which could work like a magnet. And also, you can see I have these levels: 4100, 41.25, and to be honest, I should be adding this to the chart. There you go. So these three prices we are looking at. Now let's make it make some sense. Double distribution. Until we break below this distribution, we are not gonna get the down move. We have to break below this. If I were to get my pen tool out, guys, how do you change the color? Okay, let's get purple. Beautiful. Okay, so you see this distribution and this distribution. Until we go below this, we are not going to get the down move. We have to come below this and then go to, like, if we do that, the scenario would be to visit the other side, other distribution, sorry, and the POC would be the target. So that's the whole scenario we're looking at. Let me just get rid of all those drawings. And also, boys, I have my colleagues with me here, Simon and Wall. We are a part of Flow Trading Academy. Boys, you want to say hi?
What's up? What's up? What's up? Hello, everyone.
There you go. Wall is a professional trader who's been trading for a living for since COVID. And Simon, absolute legend. He uses Bookmap. He does trading as well. Like, you know, that's a key part of his life. He loves trading. He loves to engage with people. So we are part of Flow Trading Academy, guys. We created this new company. So if you want, just let me know, and or I will just drop a link and you can just join us. So although I added, you guys can see market moving up. Okay, this is a key level. This area, in fact, not just this whole area is key level, guys. This whole area is key level because you don't want to trade gamma levels alone. You have to confluence it with other things. For example, this is the high volume node of this distribution. So, and this is the extreme. So we combine them together, and when market goes to that zone, we're looking for a reaction. And what kind of reaction did we get? Massive selling reaction. So I just wanted to add, that's all. Now, Simon. Simon, yes, hello. What's your thought on the market, bro, today?
So for me, I'm also looking at the 41.50 levels. If you look at this futures data, by the way, guys, they're not on spot.
Let me just get your screen up. There you go, boys and girls. Yeah.
No problem. Thank you, man. Thank you. So this area for me, using the book map, I was able to mark out the 41.50s, 41.55s at the key level of supply. You can see here how on the 7th of July, so a couple of days ago, we, after an enormous drop from market open, we consolidated here for quite a considerable amount of time before tanking again to the downside. Now, for those of you that have been following us in the Flow Trading Academy, you'll see that we've been marking the 41.50s and 41.55s all week. Even if you go back and see the old streams, you will see 41.50, 41.55 is a key level for us, and just due to the order flow activity and all of the reactions from there. So what I'm looking for now is, as you can see as well on the book map, these little orange lines, these are large passive sellers. So there we see 147, 146 contracts, all at 41.50 and 41.55. These were and then added back on to the current order book. So I'm really interested in what's going to happen when we get back up to the 41.50s and 41.55s. I think that aligns with your gamma levels as well, Kay. So really key level up here.
Thank you. And also over here we can see, if you can just walk me through this, over here we can see a lot of red bubbles. Red means selling, right? And market went above those. What does that show? What does that mean?
So is showing us volume. So the red bubbles that you're seeing here still looks like a solar system. So the large red bubbles are aggressive selling. So those are people getting into the market right now on the sell side. And of course, the green bubbles are going to be your aggressive buying. The orange lines and blue lines that you can see on my chart are passive buyers and passive sellers. So if you see these lines above price, these are passive sellers. Below price, these are passive buyers. So these are limit orders. So these are people that want to buy and sell at a precise price rather than getting to the market right now. So you can see here clearly, just by the amount of large green bubbles on this move up, that sellers are being absorbed. You can see that denoted by the large red bubbles we're seeing with no down move, but we continue to push up. So it's telling me contextually that sellers are still very active in the market, very aggressive in the market, but we just need to make sure that we're going to be selling from the right location.
Gotcha. Thank you, bro. That was really helpful. And I'm glad it kind of confirmed my level as well, which is good because when you have multiple confluences into your, like when you add multiple confluences to your trading, it does give you a strong conviction. It does give you confidence and stuff, right? And this is why I love about trading with you guys. It kind of helps. Like it does help a lot. Now, Wall, are you there, bro?
Yes, ma'am.
Okay, I'm gonna switch over to your screen. Let me know whenever you're ready so I can share your screen.
Hold on 1 second. All right, let's get it.
Okay.
Also, while you're doing that, let's give Simon that YouTube link so we can share it out.
Yes, I have posted it. Please have a look. Okay. Let me know whenever you're ready.
I'm ready. Okay. So, same thing. I've got a key options level right here marked out on my chart. Tapping into it right now, and we can see prior days, big before the big drop, this huge move down. We can see this consolidation area marked out, and we can see the value area of it right here. Now we should see some kind of reaction here, and obviously what the market loves to do is revisit the scene of the crime. We have a huge move, rips down, and it retraces to revisit this area. Now we're going to see if the sellers are legit, and that's about it.
Okay, and what price are we looking at?
We're looking at 41.36 futures, and this zone, it extends up into the 42s, 41.42s to 41.32s. Mostly just the value area of this zone.
All right, let me just quickly point this. Yeah,
That 41.50.
thank you. Let me just quickly point this out, guys. If you heard, he did not say he's looking to sell from there. He said, I want to see whether if those sellers are real or not. What that means is he's looking for a reaction. He want to see the type of interaction is taking place up there. Okay, for example, like I said, market was able to push down from up there. Okay, that means there was a big seller sitting up there. He wants to see whether if that seller is still present or not, or he's now moved on to a different price. This is what he essentially means. Now, just because you have a level doesn't mean you should be buying and selling from there. You want to see the type of interaction taking place. Now, we're going to do some live reading of the market, guys. You guys always loved it. Let's do it again. Let me quickly go on to my footprint. One sec. Okay. Let's pull this out. First, we're going to mark our levels, and then we're going to start reading the market live. Okay, so over here, nothing really defined, as you can see. So we're just going to ignore that, and we're going to move on to this footprint. Okay, so we had value here on this candle, value here, and value here. Now we are trading below this value. This area is key now. And I'm not talking about the whole market in general. I'm talking about candle by candle basis. Okay, each 5 minutes. Also, where can it pull back to? If it does pull back, I can already see there's 121 imbalance here. We are only going to take the big ones into account, and also this will put the market at the extreme of this candle. Okay. Now, do we have anything else? Do we have anything else? We have something here, and you can see this is the extreme of this volume. So let's put this there. Oops. Then copy this and put this on there. So this becomes a zone. We're looking at this zone. You can see over here 152 as well. What I'm going to do, I'm just going to do this. Okay. So let's see what happens after this 5 minutes, because New York just opened. This is the New York candle, and it's a key candle. Okay, this kind of sets up the motion of the market, and it tells you the whole story of what's going to happen next. With the first half an hour, basically, I'm talking about initial balance. People like to call it orb these days, opening range, but as order flow trader, it's always been initial balance. We have known it since 1960s. So yes, these days people like to call it orb and brand their own thing on it. But whatever, everyone's to their own. Whoever floats their boat. Okay, so if we break above this, guys, you can see a lot of sell imbalance here. Okay, 134, 82, 24, 7. If these guys hold and push the market down, okay, we can expect to go down further. However, look at this candle. I want you to look at the shape of the volume profile. Double distribution. Okay. What I want to see, essentially, if we are looking to go down, what I want to see is market trade below all of that. If we do not trade below these sell imbalances and we trade above these sell imbalances, we're going up a lot higher. This is key. This is key. There you go. We're breaking above. Do we leave any imbalance behind? Came right back in. Won't be able to tell you the next move until this candle finishes. However, over here you can see this candle's low. Where did it come? Towards the bottom extreme of this. So let's look at the bigger picture. Okay, we are transacting volume, which suggests we could go up a little bit further. But hey, it's New York Open. Anything could happen. And also, guys, you guys know we do about 100 handles on average on gold. We done 75, so still 25. About 25 handles to come. Anyways, let's go. Okay, look at this, guys. Let's take this off. Look at this. We are going to find resistance here. From this sell imbalance to there. We are going to find resistance here. If we do find resistance here, where can we find support, right? That's the question you should be asking. And look what they found support. On the sell absorption, because there was sell imbalance there. Those guys, they were absorbed. So market found some support here. Now, I want to see this being broken. So we are going to be gyrating around these two zones. I don't know for how long. It could break within this candle, or it could just, like, start going sideways from here. If we break below this, we are going here. Let's see. Still within that zone. It's not over yet. This is the a zero print, you can see 4 and 0. If we do break below this and leave this zero print there, this will become key. Never mind, they failed it, and as you can see, we're finding support here. Boys, what do you think?
Perfect. I don't see much else to add.
Yeah, sounds good.
Perfect.
Yeah, I think we're all looking at the same thing, which is good.
Yeah, perfect, perfect. Thank you. Guys, doesn't matter how experienced you are, it's not a bad thing. Or don't be ashamed to ask questions because we are human beings. We do not know. Like, look, these guys, Simon and Walt, they are experienced. They know what they're doing. So sometimes I might not realize I'm doing something wrong. I'm not ashamed to ask them, like, for their opinion. Because although I am right on this, they might be seeing something that I don't even realize I'm doing. From a spectator's perspective, you have to get their point of view so you understand what you're doing wrong. It's like playing football or any kind of sports. When players are playing, they don't realize the mistakes they are making, whereas if someone's watching from the stands, they know what they're doing wrong. So you can see we built a nice D shape here. Okay, this is a balance. We want to see this balance being broken. Now, we are looking at a micro structure of the market. Micro means candle by candle basis. Now, what's the macro view? Let's look at the macro view. Macro view is we're transacting volume. This suggests we're going to go up. Therefore, looking at the macro view and combining it with micro view, this is not going to hold. It's going to go up.
Okay.
Yes.
Liam said he cannot hear you on YouTube.
No?
I don't know. That's what he said on the chat.
Boys, can you hear me? Uh-oh. Okay, one sec, boys and girls. Audio.
I hear you.
You hear me? Okay, perfect. Liam, can you hear me now, bro? Please let me know what Liam says, Edwin.
Oh yeah, he can hear you.
Perfect. So we are still within this level. What I want to see a break this level with aggressive volume and leaving a lot of imbalances behind, and aka so-called fair value gap. Now guys, this is fair value for me. Okay, you can see 0 and 1, 0 and 6. This is fair value for me. What does that mean, fair value gap? Let's just break it down, guys. What the hell is fair value? This is a value. Okay, this is where market participants were happy to transact. Okay, they were buying and selling, a lot of transaction taking place. This is a fair value. Okay, and when market breaks out of it, it leaves a gap behind. Okay, they call it fair value. We call it imbalance. Okay, now you go figure out whether if chicken came first or the egg came first. I mean, you have to find out, right? So, I don't know who came up with this fair value gaps terms. I believe he was the ICT guy, yeah. But, I mean, I don't know how long he's been trading for, but ORDERFLOW been there forever. Okay, market profile and all these things. I'm not even going to tell you. Just go and do your own research. Market profile was invented in early 60s to early 70s, around that time. Okay, I think ICT was still sucking on his mommy's titties then. Anyways, these things were invented then, and then yeah, he came and branded it as his own. It just pisses me off. Just call it what it is. So this is fair value. You can see the single print. This is fair value. Look where market found support. There you go. Now, let's debunk some more. This is a week, this is a week. Is there any fair value there? No. Yes, there is volume gap, but I do not see zero prints. Okay. That's how you put fair value on steroid. Okay. When you add zero prints with fair value gap, this is when it becomes really, really powerful. Okay. For example, over here, balance, little bit of balance, there's zeros. You had a reaction, but hey, market just broke a bow. This fair value did not work. Nothing works 100%, guys. That's why don't look for strategy. Know how the market works. No strategy works forever. Okay, you just have to know when and how to apply it. We are still transacting volume here. Maybe we are going to get a pullback before revisiting this. Also, like we said, we are leaning heavily on the sell side, so I'm expecting this to go down. But looking at the macro structure, it's kind of conflicting. It's telling you that it might go up. So just sit on your hands, don't do anything, just wait for the market to show its hand. Okay. Remember, this is delta divergence. It could go on forever, guys. It could go on forever. Until market gets to a certain location, this one is going to turn around. However, this gives you an early indication. Remember, notice I used the word early. I did not say right now. Early indication. That means the move can happen at a later date, later time. So let's go here. And as you can see, this is still holding, guys. Still holding until we break above or below. We have nothing. We're just gonna sit tight. And when I say break, I mean break and close. Like over here, it did poke up, then came right back in. Okay. And then look at this, 240 sell imbalance, 210 sell imbalance. Okay, well, take over from me for a second. Or Simon, any of you? Wall's screen is up. Wall, you take over.
Alright, we're tapping into the zone, obviously, and currently meeting a lot of buyers and sellers. So they're having at it. They're going to war right now, and we're gonna have to wait for a resolution between the two to see which side's gonna come out on top. We had one level right here, 36, and looks like we are getting a push from buyers, so we might trade deeper into this zone. This consolidation breakout from yesterday. So we're just gonna wait out, see how it plays out before we take any trades.
Well,
Yes.
Liam said your voice like very faint. Maybe it's on case. Slightly put your volumes lower, maybe.
Unfortunately, can't do much about that.
Yeah.
So usually when we get this, we get absorption on both sides. It's best to stay out because most likely we'll get chopped up thinking it's gonna go one way or the other. But we can look to other, tools of the order flow to try to give us more clarity. And we can see that delta is still dropping, our cumulative delta is still dropping. So at some point, if these buyers, around here fail, this thing could drop very, very quickly.
Okay. Simon? Thank you all. Simon, are you still here? Okay, looks like Simon is not here. Okay. If you don't mind, I'm going to switch over to my screen and watch this. Look at this imbalance. Imbalance happens everywhere, guys. Okay. you have to know which imbalance to take into account. So the bigger the imbalance, the more impact it has on the market. In market terms, like order flow terms, we call a percentage threshold. So say like 300%, 200%. Most traders like to look at 300%. So we're breaking below. Okay, we're transacting volume, a lot of volume. Let's read the delta. A lot of sell pressure coming in. Buyers try to buy it. Let's go and read it from the beginning. Aggressive buyers push the market up on the way, meeting passive sellers. You can see from the delta. Passive sellers, they push the price up. Notice this area. This is a key area. Let's go candle by candle. Okay. Negative delta, market closed lower. Negative delta, market closed higher. Okay. More negative delta, market poked above, came back inside the range. More negative delta, really good volume. Okay. Really good volume. Poked up, came back down. More negative delta. However, over here, some sellers, about 90 something contract got absorbed here. You can see at some point it was minus 173. Final delta was minus 77, which suggested buyers are not done yet. But look at this. This is your clue. Market is slowly showing its hand. 203 positive delta. Where did the market go? It could even break this range. Now ask yourself this question. Someone pushing this wall so hard, they can't even break it. They cannot break it. They are being exhausted. But looking at this candle, buyers are not done yet. Minus 167 delta at some point. What's the current delta? 30. So buyers are not done yet. We should see a push from the buyers unless this gets close to 100 again and we close lower. That means sellers are being rewarded. So we still have 58 seconds to go until this candle closure. Where do we close? Do we close below these buyers or do we close above? Buyers are not done yet. They are not. Look at this delta. Delta gives you a huge clue. Yes, it's a red candle. Yes, market might drop down a little bit more. That doesn't mean buyers are out of the market. Buyers are not exhausted yet. And look, we're doing positive delta. So just because someone says a red candle, it doesn't mean it's a sell. We are still transacting here. And remember, overall macro structure telling us it's going to go up. Where can we find some sort of reaction? There you go. Here and there. Remember, it's always a zone, never a straight line. It's a zone. So we should see some reaction here if it does come down. Okay, so look where we closed. We closed above these buyers. They should provide support. And they are providing support. Okay, now let's take this off. Let's take this off. Look what we have here, 246. And this imbalance. So this is the zone. Notice I did not take this into account. If market comes, look at this distribution, extreme of this distribution. We should see a reaction from here. There you go. Here's the reaction to the tick. To the tick. Do we have a crystal ball? No. But this is just experience, guys. Experience tells you everything. There you go. Now, a lot of people will be looking at this imbalance. Scrap it. Do not look at it. Do not look at it. Oh, there is 170 there. Sorry, I did not see that one. There is 170. So that becomes kind of significant. Sorry, boys and girls. I did not see that one. I'm getting old. Maybe I need to put my glasses on. You see how market works. Being able to read the market bit by bit, candle by candle, is where real skill lies. Notice there's no significant top. What I mean by significant top is this sort of profile. There's none of that. None of that there. So that weak, the high is really weak. High is really, really weak. This will get broken. And what is the first rule of thumb when it comes to absorption? You want to see high volume, right? Do we have high volume here? No. So this is just consolidation. Although I'm in a sell, guys. I told you I'm in a sell. I started building my position. Okay. Where can we find resistance next? Right here. Within this candle. Heavy buy imbalance here. If we close below this, now this one do not count anymore, so I'll take this off. Next one is here. Anyways, okay, so those buy imbalances got taken out. It got taken out. And like I said earlier, guys, all the market came down, buyers are not done yet. So what happened? They pushed the price up. Now look, so much buy delta. Let's read the other side of the story now. So much buy delta, 133. Currently we're doing 100. Why can't market go up? Ask yourself this question. Where do we go now? Let's wait and see what happens here. Okay, this buy imbalance got annihilated, this sell imbalance got annihilated. Let's see what happens here, because there's a buy imbalance here. If we close below this, this will become key. Now, not just trade below, I'm talking about closure below. So we have a sell imbalance here, and look where it formed at the extreme of this distribution. Now we're expecting some support here or some sort of reaction on this line. There you go, we got there and we have the reaction. Market came and stopped. Now, what is the finger to the upside? What are we looking at? We're looking at this one. And there you go, guys. So if you are scalping, you know, like, okay, we broke below, where are we going here? You take your profit. That's how you scalp the market. Okay, did we leave any fair value? No fair value gap on the way down. No trader, and I can assure you, apart from trader Tom, to be honest, that guy, oh my god, he's a legend. He is a legend. Like, he doesn't even look at footprint. My god, his skill level is way higher. He just looks at candles and reads the market live, bit by bit, like candle by candle. That guy is amazing. Anyways, because we trade order flow, and that's what we learned from the beginning, we're going to stick to that. No trader, apart from trader Tom, obviously, can tell you exactly where market going to go and stop or have a reaction. Now, are we right every single time? No. However, 8 out of, oh, that's actually pretty high. I'll say 6 out of 10 times we are right. I always like to give myself a lower score so I have room to improve. This is key, guys. This is key. This is key. Now, go up here. What do we have? We have nothing there. Just some zero prints here, which, okay, another scalping technique. Let me just show you guys. Whenever you have zero prints, mark that. Mark that. The whole sell area. And from there, you're looking at 5 handles. So, 41.19.40. We're looking at 5 handles, so 41.14.40. 41.14.40. Here. That's the price. Is it this one? This. There you go. So, we're looking to get there. That's just a scalp trade, guys. We'll go back to reading it candle by candle. Now, this is more of an advanced technique, guys. I wouldn't recommend anyone to do it because you have to align it with other things like levels and stuff like that. And there you go, guys. Earlier when we drew this zone, look where we are getting the reaction from. We did say we're expecting a reaction here. I did not say we are going to turn around. I said reaction. Okay. So, nice distribution. Okay. Nice distribution here. Well, I want to see a trade close to this price. That's what I want to see. Wall? Simon, are you guys here? What do you see on your chart, bro? I'm quickly pulling up your chart.
Alright, so we had this quite a large absorption over here, and then obviously consolidated. We're starting to break lower. Buyers are still trying to step up, but Delta's still dropping, so if, you know, like eventually if these buyers finally give up, it's just gonna crater.
Crater, that's correct. So essentially,
You can still see they're still trying to keep it within this range up here.
okay, yes. So can you tell me what those green bars at the bottom are? What does that mean? And
So
can you explain your chart a little bit for me, basically?
perfect. So this is a footprint chart, so we can see what's happening at each price level between the buyers and sellers. How between the buyers and sellers are taking trading activity, and here we see the total volume of the candles. So when you see the number at the low of the candle down here, this basically represents 200 more aggressive sellers, but price closed higher, trapping these sellers at the lows. And what does price want to do after that? Wants to move up because obviously these sellers are out of position, and now they're trying to take them out, and vice versa on the top side.
Perfect. Thank you. Thank you. Okay, so over here, they got annihilated. Like I said, guys, I'm not right all the time. Okay, now let's read the next bit. This is a weak high. There's nothing up there. Nothing up there that should hold it down. So I'm expecting this to just go. Yes.
There you go.
Let's read the next bit.
Well,
Hello?
Yes.
I can hear myself.
yeah, man. Right, 1 second.
Yeah.
Oh, yeah. Well, we couldn't hear you at all, bro.
Oh, okay. Must be something to do with K's side.
Yep. Okay.
Thank you for letting me know. Okay, I couldn't hear anything. Like, whenever you spoke previously as well, I couldn't hear you.
Oh,
Right.
okay. Thank you.
I think I'll have to fix it. Okay, now this is crucial. What's happening here? Look at this, guys, where we're getting the reaction from. This extreme. This extreme. Exactly to the T. What I'm looking for is it this heavy buy imbalance? If you're a seller, that's what you're looking for. Market close below this. You want to see market coming back inside this, below this, inside this range, okay, and close somewhere around here or wherever, as long as inside this range and below this balance. Obviously, this is the cash open, a lot of volatility, a lot of volume going to be traded, so keep that in mind. Okay, the picture does not line up now. I want to see buy imbalance or massive sell imbalance here. Some sort of big imbalance. And has to be over 100. Okay, so I think there was some technical glitch, guys. We couldn't hear Wall for some reason. Maybe it's from my end, but Wall was speaking. He was explaining his chart and stuff like that. Probably will be able to fix it after this stream. I'm an old person. I'm not really good with technology and stuff, so leave me alone. Come on, gold. This damn thing. What's it doing? Okay. If we close above all of that, we're going a lot higher. And we might be heading towards 50 region. There you go. We are going with zero prints. A lot of zero prints. Zero print here. This will be key. Okay, you got filled. Like we explained earlier, guys, this high was really weak. Like just by looking at the shape of the profile, like look at this. There's nothing. There's nothing that could hold it down. Okay. Let's take this off. And where did we get to? GAC 7 and BL6. These gamma levels. Okay, right back inside. Did we take the higher of previous day? Yes, we did. Now, this is the high of previous day. Okay, so what do you look for? You have to know. I'm going to drop a gold mine here, guys. You have to know what time frame trader you're interacting with. Get your books out, get your notes out, get your pens out. Do whatever you have to do. Write this down. You have to know the type of traders that you're interacting with. For example, if you know you're interacting with someone who's day trading, you know, there's a weekend. Okay, there's a weekend. If you know you're trading with an investor, some larger time frame trader, you have to take note. Okay, you have to be cautious about it. Now ask yourself this: who is sitting above or below previous day's high, previous week's high, and all those stuff? The bigger the time frame, the bigger the trader. Keep that in mind. Okay, because we are looking at the daily profile and we just wick the higher of previous day, we are looking at a medium term trader sitting there. It's not a day trader, it's a medium term. His trade could last between 3 days to a week. Okay, and what do we look for around previous days high and lows? You look for absorption. And what's the key to the absorption technique? Is high volume. Okay, you want to see high volume being transacted. This guy just slamming the price down at this point. There you go. There you go. He's just slamming the price down. Does he get to hold? That's the thing. Remember, he's not the only trader who's trading. You want to see the market show in his hand. Anyways, let's take this off. If we come back inside and close below with good volume, we're going down. The key to this trade is volume. Volume tells you everything. Okay. Market makers, dealers, big traders, they can do everything they want. They can do iceberg orders, they can mask their orders, they can route their orders, do whatever the hell they want. They cannot hide volume. The moment the order goes through, it shows up. Okay? Until then, they can hide it. Keep that in mind. So, always use volume to your trading. And always know who you are interacting with, what kind of traders. Always look at weekly high, monthly high, yearly high, previous day highs and lows. Those things are important. And you want to see the type of reaction taking place. You go to every single chart, guys. For example, I'll just go here. Okay, this stays low. I'm going to change the color a little bit so we know this is red. Okay, cool. This is the low. We want to see, look at that. Who can break below previous day's low with so much aggression? And then look, market went up, came right back up. There's your clue. We're going down. It's no joke. Like, there's someone big selling this market. So yes, right now we broke above, came back inside. Do we close? Oh, by the way, let's have a look at that. Look at the volume here, guys. Remember what I said. Look at the volume. Massive volume. That's what you want to see. You want to see massive volume. Right now, what's happening? Dead volume. So it could go either way. It could be people just being stopped out, or people taking profit. You want to see heavy volume. Whenever you're looking for something, you want to see heavy volume. Look at this area. Okay. Market dropped, turned around. What did you get? Heavy volume. Volume is key. Okay, anyways, let's go back to reading. Okay, there you go. 200. This is going to become resistance. And look at this 100. So this is a whole zone. It's a whole zone. This area is a whole zone. We can find resistance here. Where can we get down to? Here. This extreme. There you go. So if you are selling here, this is your target. And where does your stop loss go? Right above this. Not any lower, higher, or anything like that. No. Right above this. And you're looking to get to this area. By the way, also look at the peak of the volume. Peak. But there's nothing significant, so this is the key area. At this point, if you were scalping, what you would do, you'll go break even on your trade. Because look, we left a lot of imbalance here, right? If market was to come up, yes, these are minor imbalances, and I don't take too much. I don't put too much emphasis on these ones, but they should provide some resistance on the way up. And also, we have sell imbalance, buy imbalance mixed together. Majority of the volume being transacted lower on this candle, so you want to see it close below this transaction. If it was to come back up, you just book your profit, walk off, take little amount of profit. But until then, you're holding. Okay, I'm expecting this guy to provide resistance now. This is a sell imbalance. And is sitting towards the top extreme of this value. Let's see if we hit the target. Now, this may look small, guys. This is bloody 8 handles. 27 to 1950. 2750 to 1950. That's 8 handles, guys. That's quite a lot of money. Okay, we have a buy imbalance here. Okay, keep that in mind. Keep this guy in mind. He's going to provide support, and he is providing support. At this point, I'll just take profit and walk off. I would even look for the thingy because we are trading order flow. We are flowing with the order. And as you can see, he just pushed the price up. Market touched it and went right back up. Just take your profit, protect your profit, and walk off. Okay. Do we close below this guy? He's still providing support. Yeah. And remember, we had massive sell imbalance up here. It's gone. It's not there anymore. What I want to see now, if I was a seller, because we closed inside today's range, I want to see aggressive selling coming in, but not now. Everything has to line up. Let me show you why not now. Okay, let's take this off. I want to see sell coming in here on this zone. I want to see it go up and have a strong rejection of that level before collapsing. We are still using volume profile. Remember, this is the extreme. If you were to sell from here, where do your stop loss go? Oopsie. Right here. Right here. So we'll leave that level, leave that zone there, and we'll see what happens. Let's go back to reading this. And there you go. Hit the TP. But hey, like I said, you'd have taken a profit. You have to know beforehand where you're looking to get to. Okay? If you're driving a car and you don't know your destination, where the hell are you going to go? You're just going to get lost on the way. You have to know where you're trying to get to. And order flow is our navigation. This is what directs us to which direction we should go to. Okay, so this is done. Complete. Here's where we're going to find support now. Are we finding support? Yes, we are. Does that mean it's going to hold? God knows. We're just looking for a reaction. There you go. Bring me one trader who can do that. One. I'll sit here and wait. Now, these things, they didn't come like this. They came over time, over the years. Boys, what do you think of the stream so far? How's it going? I know I'm bragging a lot. Any feedback? You can be open.
Not really. Just probably like not too crazy.
Not too crazy in depth. Oh, am I gonna confuse people? Okay. Okay. I'll take the feedback into account. Thank you. I appreciate that, man. Just to let you know, guys, what wall means about not too crazy in depth is because sometimes I got too much into depth and people just lose track. They get confused. Look, I am a good trader. I'm not a good teacher. I'll tell you that. These are two separate things.
Teacher, but just not for beginners.
Not for beginners. Oh yeah, I'm sure with that. I'm bad with beginner traders. I agree. I'm more into like intermediate and advanced level. Okay, where can we find support and resistance now? Now I'm showing you true support and resistance, guys, beforehand. So this is the IV high, IV low here, IV low, and where's my IV high? Over here. It's not showing for some reason. Maybe I need to open it. Maybe I need to sort it out later. I'll do that later. Anyways, I don't use it. Look at this. Look at this. 105 and 120. Now, before I took this as support, right? I'll put that there. Oops. There you go. But right now, this is more of a zone. More of a zone now. However, a strong support, we should be getting it here on the yellow line. And what do we have here, boys? We have zero prints. What do you have here? Zero prints. I need to put my glasses on so I can see these things. Okay. We should find some support here. Okay, where did we close? Above this buy imbalance. It's trying to get to this area now. There you go. We got to this area. Always look at the profile of the shape of the profile, sorry. God. This is an area, and look at the extreme of this. We're always taking a step by step. Oh, come on. There you go. I'll end the stream soon in 10 minutes, guys. So take whatever note you can. This might be a bit too boring for you guys, but you can look at a traffic light and make money. No red and green signal. And don't expect some random guy, in fact, even me, don't expect me to make money for you, because whatever I see, you cannot see it. Okay, or you might not see it. wherever I'm reading, it might not reading it might not be reading the same thing. It might be reading something completely different. So try to learn and apply it your own way. Okay. See the pattern in the market. And when I say pattern, I don't mean bloody cup and handles and stuff like that. No. I'm talking about patterns in the order flow. How they move the market, where they move it, from where to where. You have to look at all those things. And you see, this zone provided real support. Now, if you were to buy, your stop loss has to be below this. Has to be. And where are you looking to get to? Look at this. We're looking to get up here. That would be your target. In risk to reward term, is this worth it? Yes, it is. It's like what? Let's see. 41.1270, and you entered at 14.40, so 1.7 handles, and you're looking to get this 1980. So about 5 handles. Okay, yeah, it is worth it. There you go. We're trying to get there now. Okay, we have a stacked imbalance here. There you go. We got there. Done. Trade done. How much money, had you taken all those trades, how much money would I have helped to make? Wall?
Quite a lot, because it's all about, your own capital and sizing.
Yeah. Okay, then percentage is the right word, right?
Percentage.
Yes, that would be the right word. How much it would have been? By the way, guys, we are having range expansion. When people say range expansion, they do not know what the hell they're talking about. They're talking about this swing was 500 pips, and this swing is 200 pips, blah, blah, blah. No. We look at order flow and read range expansion. What I mean by that? Look at the order flow. Look at this chunk of volume and look at this chunk of volume. Look at the range between those. Okay, this tells you true range expansion. All right, my kids are home, guys. Thank you for tuning in, and I'm gonna end the stream here, and hopefully I'll catch you guys on a different stream. And also, guys, I'm from Flow Trading Academy. My name is Kay. I was co-hosted by Simon and Wall. These are my fellow traders. We trade together. If you guys do want to join us or chill with us on Discord, hop onto our Discord channel. I'll leave the link in the description below, and yeah, hopefully I'll catch you on the other side, guys.